after us. I learned a lot. I'd never been sued before to that degree. I was, in somewhat of a legal issue when I left my old firm and launched my new firm, but we settled that pretty quickly. But I'd never been sued before, and I never kind of had my, financial life flash before my eyes, if you will. Uh, but once I got through the initial shock of it in 24 hours, I looked at my brother, I looked at my partner, and the three of us said, we're gonna make it through this. We're gonna figure this out, and we're gonna make it through this. And frankly, I didn't have a lot. I had a firm. I was.
Yo, this is Christian D. Evans with Journey with Christian D. Evans podcast. Guys, thank you so much for tuning in and listening to our amazing podcast. This is where we reveal the top 1% of business concepts and systems and processes to scale 8 and 9 figure businesses. We interview top level 8 and 9 figure CEOs, business owners, and amazing TEDx speakers like David Meltzer. We got Nick Cavuto, Pascal Bachman, and so many others. And if you feel like this resonates with you, please share this with your friend, your family, and make sure you impact them as well, because we're trying to spread the message on those that do not know how to scale 8, 9 figure businesses and talking higher level business concepts. So guys, remember, enjoy the episode and be uncommon if you can. Cheers. Thank you so much for tuning in to Journey with Christian D. Evans podcast. I'm your host, as always, Christian D. Evans, and we have a very special guest on today. He is the managing partner at TwinFocus, and he manages about $8 billion assets globally. He's got an office in Miami, an office in London, and an office in Boston as well. And we're going to be talking about a lot of fun stuff because he actually came from a middle-class family, mechanic family, to now all of us scaling and helping ultra high net worth families, really helping their investments and everything like that. Now, he is also on the board member of the Boston Security Analysts Society. He's also a Chartered Financial Analyst, and also a CFA Institute and an investment management consultant. He has been featured in numerous different other areas, and I'm so excited about having this conversation. Please welcome my friend, managing partner at TwinFocus, Paul Karger. How are you doing today, Paul?
I'm doing great, Christian. Thanks for the opportunity to come speak with you today.
Well, man, I'm really looking forward to this conversation because, like I mentioned, you've been featured numerous different places, and I just want to get right down to the meat and potatoes of things because, I mean, you've had a credible journey, and I mean, going from 2008, and a lot of people are seeing right now. And what's so interesting is we were having a good conversation offline before this podcast and just talking about the paradigm shift, what people need to be kind of focusing on, but also holistic, right? Principles that they need to be focusing on long term, regardless of what's happening now and what's happening in the future. But I want to start with your journey, man, because you grew up low middle class. You mentioned this, janitor, tire mechanic. Help me understand like your journey to now managing $8 billion globally for some of the wealthiest families.
Sure. Yeah, I was raised by a single mom. And unfortunately my parents were involved in a long, bitter divorce that went on for over a decade. My father was quite elderly, about 30 years senior to my mom. And then he passed away when I was kind of in my mid to late teens. But from a very early age, my brother and I and my sister, we learned that if we wanted to get ahead, we needed to work hard. And frankly, failure really wasn't an option. And we tried our hand at everything. As you mentioned, tire mechanic, and I used to pump gas, and I was a janitor at the library. I worked at a hardware store, and part of life is figuring out what you don't want to do, right? And but I was handy with my hands, and thus actually went on to go study mechanical engineering in college. But I learned early on that hard work could yield some success, and the harder you work, the luckier you get, if you will.
No, let me ask you because, coming from a single parent family, right? I would imagine there was some, and maybe I'm mistaken on this, there was some money that was like beliefs that were passed down that you had to overcome to be able to manage and to be able to achieve the successes you have. Is that correct? Or did you never have those kind of limiting beliefs structured in your life or passed down?
The situation I was in, I have a twin brother, but I was kind of had this front row seat to everything going on in my mother's life and throughout the divorce, because my mother really didn't have a family or a support system outside of her three young children. She shared everything with us. So even at a young age of, 8, 9, 10 years old, we were the receptacle of a lot of information. Looking back, I would say that, definitely I had, a bunch of challenging circumstances around me. But, when you're a kid, you don't know. It's all if you will. I have three kids today, and they have a very different life. And I can't fault them for that. I've created a different life for them, but it's all they know. So, they go to nice places, nice vacations, they live in nice homes. But again, it's all they know. So when I was a kid going through the situation of, experiencing my mother struggling to pay the bills and fighting my father in divorce court, it's really all I know. It's my brother, my sister, and I. We just realized that we had to work, and there wasn't really another option. There was no, rich grandpa, grandma. There was no aunt and uncle that could help us out financially. So it wasn't an option to us. It wasn't even in our mind. And I think that that belief around understanding that, the harder you work, the luckier you get, it comes from that. Perhaps, I'll have to figure that out with my kids. I think, when I look at my day job across families that I work with, I think, the children that come from wealthy families that tend to be the most successful are those that learn the value of hard work early. So we're in a different time today. I think not just the US, but I think globally, this younger generation is faced with a situation that they haven't seen lots of hard work. And I think that's, that can make you soft. What's the old expression, strong men create, easy times create weak men, create create hard times create strong men. There's a cycle to this stuff, and we'll just have to figure out where the world goes with it. But it's for sure, it's something that I learned early on, and my brother and I and sister as well. I mean, we worked 5 days a week. We worked every night. As soon as I could get out of school, I was running to my gas station job. I remember at some point I was working at 2 different gas stations because they couldn't fit me in, on every night of the week, at one gas station. So definitely, those are lessons you learn early on, and they stick with you. They talk about, recession babies and learning how to save. And we'll probably be talking in 20 years about pandemic babies, and some of the lessons you learn from that. That said, I think overall, mankind has a pretty short memory. So I think long term, I think mankind doesn't really learn from a lot. It's why we continue to make the same mistakes over and over, and maybe drawn out cycles.
And I really appreciate you saying that, because there is, it's a concept of like going to work out, right? You want to put as much weight on your muscles, because that induces obviously, weight increase, right? It break down, but then it obviously rebuilds. And that's the whole concept of it. Let me ask you this, Paul, because, you went from, janitor, right? And and let me ask you, because is it a matter of working hard, or is it a matter of being in the right vehicle and working hard? Because sometimes you could stay in janitorial work your butt off, but only tap out at 70K a year. And you've done very well. You're now, managing 8 billion at TwinFocus. And so, globally. And so what was that evolution going from this vehicle to then obviously getting into the investment world?
Let me address it in two ways. One of the important things that's been kind of monumental in my life is my experience with martial arts. And not to say that I'm the best martial artist or I'm even the best athlete, but one of the things that martial arts has taught me is that coming in and just grinding it out every day, you get 1% better or 0.1% better. Right. And it's true with, I have a friend that always says, most of life is learning learning the language. And, it's true with learning a language. I actually speak Spanish. I've been taking Spanish lessons for 10 years, and I take Spanish lessons from 7:30 to 7:59 every morning when I'm in Boston via Zoom. And I speak Spanish, right? It's that kind of stick-to-itiveness that I learned early on, which is what hard work taught me. And, on the business front, it's truly that stick-to-itiveness. When I started my career 20 something, 25 years ago, I most certainly was not working with centimillionaires and billionaires, but everybody starts somewhere, and I started as a janitor. I started working at gas stations. And, if you've got a drive in life, you're always on this quest to kind of upgrade. And life is a series of stair steps where you're kind of going up, maybe a plateau for a little while. You figure out how you're going to make your next up move, and then boom, you shoot forward. This is even true in my business today. We'll move sideways for some period of time as we're digesting new families and new clients that we're working with, and then all of a sudden we'll bring on 2 or 3 or 4 new families at once, and then we move sideways as we digest those. And it's kind of a metaphor for life, right? It's life is a bit of this kind of 2 steps forward and 1 step back, and figuring out what you don't want before you figure out what you do want, and building that wall and kind of taking part of the wall down and rebuilding it. And but you can't lose sight of the fact that that building the wall is actually, that's living, right? If you finish the wall, you finish life, right? So it's you've got to really enjoy that journey.
Enjoy that journey. I like that. I like what you said there. And it's like not sometimes about the result, it's about doing that and being intentional. When you're going from, janitorial to, the investment world, and I appreciate you kind of explain that. It's that right perspective on getting 0.1% better, right? That martial arts aspect. Um, I always love to ask about like self-image, self-esteem. Were you always had that self-confidence, like showing up, hey, I can work, I can talk, I can, talk to billionaires and centimillionaires, or was there a lot of self-image, self-esteem that you had to establish? Definitely coming from a single family, or just, obviously having a twin brother as well, maybe being, felt like you're overshadowed by your twin brother, et cetera. So I'm just curious on that.
I'm fortunate in that respect that I always had some level of confidence. I think my confidence has gotten greater over time because, experience breeds success, success breeds confidence, so, and I think, you get the kind of, deeper balance sheet and kind of just deeper experience. It's the same thing as a martial artist. The more you train, the more you fight, the better you get, and the more confidence you get. But I was fortunate where I always kind of had this level of confidence. I also, I never thought failure was an option, and in fact, it's not to say that I didn't fail. I have failed a gazillion times in my life, but I've had this ability to kind of just pick myself up and keep moving, and if something's not working, I try to cut things early and keep it moving. I mean, I tend to believe that in life that things usually don't get better, they get worse. And you're usually just as good of a judge of a situation now as you are probably in the future. I mean, yes, there's new information you can learn, but you've got to trust your gut on those types of things. And, it's, again, it's certainly, I've got more confident over time, but as a little boy, I have 3 kids, and my oldest son is very much like me. And he's just exudes this huge amount of confidence. I think that in many sense, that's something you're born with. It's hard to, I'm also quite articulate. I'm a good salesman. I tend to say that salesmen are born, they're not made. It's hard to make a salesman. It's hard to take an introvert and turn them into an extrovert. Sure, you can do, Tony Robbins courses and try to learn how to kind of hone your skills and whatever, but you're born the way you are. You're largely born the way you are, and largely people don't change. They
Yeah, and
evolve.
I
They don't change.
appreciate. Yeah. Yeah, yeah. And because I always am curious with the self-image, self-esteem and working through that. But you came with very high confidence. And I love what you said as well. You experienced failures, but the way you presented the failure, because I want to talk a little bit about this here, because you were mentioning this offline. I want to bring this up. Investment 2008. During that same time, that whole situation, 2008, you were managing at this huge firm, right? But also during that time, you went through a 3-year lawsuit as well. And that mentally, stress, all that stuff, right? Just if you could, Paul, imagine yourself at that time period again. And you were facing all that. And there was that uncertainty, there was that unknown. And probably a lot of clients were calling you. You know, what kind of mindset did you have that helped you persevere during that time?
Sure. To give you some more background, I launched my firm in 2006. I was previously at a big global investment bank, and I had this vision, and around 2004, 2005, of kind of this firm that I wanted to start. I didn't have a a real path as to how I would get there, but I had this vision and, a lot of tenacity. And I launched the firm with my twin brother in 2006. Within a year and a half after that, the world enters the great financial crisis. And, I most certainly was not managing 8 billion. I was most certainly not even managing $1 billion then. And, when I launched my firm with my twin brother, we threw caution to the wind. We cashed in our 401ks. We borrowed some money from a couple of close relationships, and we went for it. And, again, failure was definitely not an option. And 2008 hit us. And, like everybody else, I mean, everybody else was challenged. The world was challenged at that time. We had one particular investment that went sideways, and we had one client that, got quite upset about it, even though it was not directly our fault. The client didn't have anyone else to blame legally, because everybody else that was really at fault had indemnified themselves with his money. But he decided that he was going to come after us. I learned a lot. I'd never been sued before to that degree. I was, in somewhat of a legal issue when I left my old firm and launched my new firm, but we settled that pretty quickly. But I'd never been sued before, and I never kind of had my, financial life flash before my eyes, if you will. But once I got through the initial shock of it in 24 hours, I looked at my brother, I looked at my partner, and the three of us said, we're gonna make it through this. We're gonna figure this out, and we're gonna make it through this. And frankly, I didn't have a lot. I had a firm. I was negative balance sheet wealth. I had owed people money, but it's failure was definitely not an option for me at that time. And there were a couple of trying times in that December 2008, early days that I said, geez, and I wake up every morning at, 4:30 in the morning, and I'm generally very excited to get up and go work out and go to work. There were a couple of days in there where I was not as excited, and a bit sick to my stomach thinking about having to go in and face the day. But that's what separates, leaders, right? I heard a quote recently from a mixed martial artist in a UFC bout. He said, without fear, there is no bravery, right? You need to, you want to, that's a definition of bravery, going in and dealing with something fearful. And that's also, as I said, what separates leaders, the ability to get up, figure something out, work through something, motivate your team. I had to keep a positive face with my team in the office so they all don't run out the door and say, geez, the world's falling apart. But I learned a lot in those 3 years. I learned how the legal system works. I learned how arbitration works. I learned how expensive attorneys can be. And I worked through it. And, as one of my board members said to me at that moment, he said, I know this feels like a huge burden on you, but he said, these types of experiences you want to have when you're young, when you don't have a lot to lose. And I said, what do you mean? I have a lot to lose. I have my life to lose. And he said, no, in the grand scheme of things, you really don't. You're going to be fine. And we persevered. We made it through. We were completely vindicated in a lawsuit, and we kept it moving. We kept it moving, and we put it behind us. And frankly, we changed a bit of our business practices for the better, honed the way we do things, and it made us better business people. It made us a better firm.
And I love this. I love what you said there, because you have the right mindset. And I'm always curious, and I want to ask you, Paul, because, a lot of people think that individuals like yourself, you guys don't fail, or like there's ever a financial problem. But the reality is that there is. It's just sometimes there's just more zeros associated with it, right? And so, like you mentioned, there might be a negative balance sheet. Well, now all of a sudden we're talking millions upon millions of dollars instead of just hundreds of thousands, right? And so I think it's very contextual for our audience. I want to ask though, when you have experienced that, like there was a lawsuit, and there was 2008, and like you mentioned, you were able to learn from that. How did you analyze that? What were some questions, that helped you facilitate like systems and processes that you integrate into your business now to help you really strengthen that? Because like you mentioned, it's never fun to go through, but looking back on it, you obviously want to make sure you have a good stronghold and defense. But definitely, and I'm talking lawsuit, but also in alternative investments or whatever, strategies, et cetera. So just want to ask, how do you look at failure, but not only look at it, but how do you make sure that you analyze it correctly to ensure that you don't fall back into that same situation?
That's a good question. I think like anybody, when you're going through a difficult situation, um, which I'm reminded of the Winston Churchill quote, when you're going through hell, just keep going. But when you're going through a difficult situation, you're always questioning, geez, how did I get here? What did I do wrong? What could I have done better? And perhaps you do it in the heat of the moment, and the more time you have, the more time you have to kind of think about these things. And as I said, it changed the way we conducted business. It changed the way we memorialize things. So it's yeah, again, I think the biggest thing is being critical on yourself, and asking, how could we have done things better? I'll tell you, as an investor, situations like that, investments that have gone down, investments that I've lost all my money in, you know, those things have taught me a lot of things over time. Those types of situations have taught me a lot of things. I say all the time, in martial arts, it's knowledge through pain. You don't, when you have success, you think it's because you're so smart. It's actually not because you're so smart. It's because you were lucky. And I believe in hard work creates luck, right? And creates opportunity. But, when you have that success, nobody is remembering, because they weren't with you, all of those failures that you've had before. My wife often says to me, Paul, you're so jaded, you're so negative on things. And it's not that I'm jaded or negative. It's that I've gotten fucked in the past. I've gotten screwed on things. And that's how I've learned. It's like jujitsu. It's like, oh man, I'm going to get my arm snapped. Like I'm not going to do that again. It's easy to watch it on a YouTube, but when you're in the real life situation and you're, about to get choked out, you're like, geez, how did I get here? I'm not going to make that move again. I'm not going to extend my arm. I'm not going to let somebody take my back like that. It's knowledge through pain. It's the only way we learn. We don't learn through success. We learn through failures.
So this is really good. And I'm glad we went through this. So knowledge through pain. And what happens is when we experience pain, we become less courageous next time. Or and maybe it's dependent upon the personality, but sometimes it's like you learn from it. You're like, okay, I'm not going to be as aggressive next time. Or, hey, I'm not going to deploy 30% of my portfolio in this one, investment or whatever. Or, I'm going to go all in.
It's part that, and it also causes you to think, like, is the juice worth the squeeze here? I'm the chairman of a company right now, of an investment that we made some years ago, that is no doubt taken years off my life. I'm in the process of negotiating an exit, and it's probably going to be extremely successful financially, and it will be a huge feather in my cap. But I've had a lot of pain with this investment, and we probably end up making 3, 4, 5x on it. And I don't know if I would tell you that I wouldn't do it over again. I've learned a lot. I've learned a lot about the industry. I've learned a lot about the players. I've learned a lot about myself. And it's like when you train for a fight, there's a lot of soul searching in there, and win, lose, or draw, you actually win with the experience. So.
Was there a mentor that helped you through your journey? Like someone that was, a key person in your life that planted certain seeds?
I've been really lucky, even though I was raised, largely without a father, and, without really any family. My brother and my sister and I have my mom, but we don't really have much extended family. I've always had really great friends, and, perhaps, because I was young and didn't have a father, I always felt kind of void of that. And my mom would say, if you take Paul at 5 or 6 years old to a birthday party, you'd see all the kids playing in one side, and Paul would be on the other side talking to one of the dads. It's because I craved that kind of, fatherly interaction. And as a result, I built some really great mentorships over time. Folks that are, father-like figures to me, that have helped me think about things, have helped me financially when I've needed it and didn't have any other place to turn. And so the answer is yes. And there's been several of them. There's probably been 6 or 8 of them over the, my 45-year journey.
So how did you, and you said not more of mentors, but fatherly figures. And I'm curious, for those friends that came alongside you, what kind of tough conversations were you ever like ever experienced from them? And what I mean by this is, did you ever have someone that said, hey, Paul, you're not living to that next level that you're capable of doing, and for some reason you're not being able to establish that? Or I'm curious, is that ever experienced in your life? Paul, and I really appreciate you saying this, because, a fatherly figure, and you realize it about yourself, and, you didn't really have that mentor. But I was curious in regards to having the tough conversations with, whether it's a friend, whether that's a fatherly figure, and maybe having someone that would feed into you and saying, hey, Paul, you're capable of doing much more, and maybe telling you the hard truths that you needed to experience at that time. And having, humility as a leader. But who were those people that kind of fed into you like that planted those seeds?
Yeah, as I think I mentioned, I've been fortunate to have kind of numerous mentors along the way. I think, because I was kind of devoid of this father figure early on, I was always kind of attracted to hanging out with these more fatherly type figures. And I can think of, several along the way at different, kind of junctures or different chapters in my life. Yeah, I don't think there's any necessarily one that is stuck out. I do have a professor that I met my freshman year, first semester in college, when I actually my father had passed away. That coincidentally has my father's birthday, which is a day before my eldest son's birthday. And he has been kind of a mainstay in my life from the age of 18 to 45 today. He's a legendary professor at Boston University. He's retired now. He's about 90 years old. He had a bout with leukemia. It's an incredible story, perhaps beyond the scope of this conversation. But he had leukemia and was basically in hospice 5-6 years ago, and we thought he had a few days to live, and he made a remarkable recovery. But he's always been there to kind of keep me on the straight and narrow, and give me this kind of North Star around, even though he hasn't been involved in the day-to-day minutia of my life, my business. I've always been able to go to him with a situation, and him kind of give me a solid opinion, and some good advice around, maintaining that North Star, and maintaining integrity, and the higher moral ground in situations.
That's awesome, man. I really appreciate that, and it's just great to see and hear that good news as well. Definitely with your friend there. I want to talk a little bit about your base of your clientele. What I find so interesting, Paul, and I haven't talked to like billionaires like yourself, but I've talked to some individuals that are in a very high
I'm
net
not a
worth,
billionaire.
ultra high
I'm
net
not a.
worth. Yeah,
I'm definitely not a billionaire.
but your ecosystem of billionaires, and I should say. But my, my,
Yeah.
my point is at the end of the day, people are people. Doesn't matter how much money they have. And why I say that is that human psychology and human behavior is integrated with everybody, no matter what. And so I'm curious, Paul, I'd love to just kind of maybe bring some analysis and compare and contrast with those that are out there, like maybe don't have access to, your investment portfolio. What do you explain to your clients during this time to navigate them? Because at the end of the day, they're probably stressing out, they're freaking out. And I understand there's been a lot of studies where whenever there's a big drop in it, whenever they lose money, whatever, there's always more stress, more anxiety, more frustration holistically than there is when there's a gain. And there's been a lot of research on that. But I want to ask you, the conversations that you have with them to ensure that, hey, with they acknowledge the emotional aspect versus the logical.
Sure, it's a good question. In my day job, we work with families with substantial means, north of $100 million of assets. And the average person on the street says, geez, that's a lot of money, and they make more money in a year than I'll ever make in my life, and they must not have any financial concerns. And it's actually quite the contrary. Wealthy families can have money problems too. And there's this strange thing called kind of life inflation. Things get more expensive over time, and often the more money you make, the more money you tend to spend. And things can get more expensive, and private schools and nice vacations, and all these things as you're kind of climbing that wealth curve. Um, but their problems are real to them. They have problems too. And a lot of times, if they don't have kind of money concerns, all the money does is avails them the opportunity to worry about everything else. And back to my earlier comment, I mean, the Chinese say, rice paddy to rice paddy in 3 generations.
typically there's a wealth generator at one level, and then there's kids that benefit from that, and then there's grandkids that may not really even understand how hard the original patriarch and matriarch worked, and they tend to squander it. And you can't expect, I think, typically somebody to manage lots of money that didn't make it. It's quite burdensome, and it's a challenge. It can be an emotional challenge. It can be an emotional burden to have to manage a lot of money. And I know this sounds like please give me the violin here, the small violin. But again, everyone's problems are real to them. And in the current situation, this said, I will tell you that wealthy families tend to have a different set of problems and complexities to think through. They're not the average retiree, which is watching their 401k or their retirement plan down 25% in the current environment, wondering, are they going to be able to pay their heating bill this winter or their food bill? They've got other concerns. But nonetheless, what you're referring to is wealth effect. When the market goes up, the market goes down, it can affect people's psyche, and their mood. And so, what we try to do with our families is give them the confidence over time that they have the ability to withstand volatility. And frankly, you need to make financial decisions, long-term financial decisions, strategic financial decisions, not in the heat of the moment. You need to have a plan in place, because there's always going to be something, right? There's always going to be some calamity or war or some kind of noise that affects the financial system and the economy. And you need to have a plan in place to be able to deal with that and not get spooked out by it, and realize that you can make it through. My business partner says all the time, time is the best hedge. And it truly is. If you have a long-term window, whether you have $100,000 or whether you have $100 million, if you set yourself up and you live within your means and you have the advantage of time, you'll make it through. You'll make it through tough times. Like we just came off of an incredible run in the global equity markets, and the world hit a peak in terms of asset sales and valuations in kind of Q1, Q2 of 2021. We're now on the backside of that. We're now, the world since the great financial crisis, whatever it's been 14, 15 years ago, has been swamped or, pardon the pun, inundated with liquidity, with global liquidity, through the great financial crisis, through a number of presidential administrations, through a number of Fed chairmen and chairwomen. The Federal Reserve and central banks around the world have just turned on the printing press. And, we're now at a point where the world is grappling with inflation. And how do they combat inflation? Inflation is often a byproduct of loose monetary policy and loose fiscal policy. And, we're in this stage right now where things are different. Things are definitely different than they were the last 10 or 15 years, where the punch bowl is being taken away. And the world has to figure out how they deal with less punch. They have to figure out how, asset prices look, all asset prices, from your home to apartment buildings to the stock market to, whatever it may be, with interest rates at, 1, 2, 3, 4, 500% higher, 500 basis points higher than they were. It's a different world. You price assets differently based on where interest rates are, where the risk-free rate is. And, it's nice for savers. It can get, 4.5%, 5% in the bond market, which hasn't existed for many years. But it's painful for risk takers because that risk is being priced significantly lower than it was.
Which facilitates the next question here, because like you said, I think it creates these questions. People are looking, when's the bottom of the market? Where are we at in the recession? What's the interest rate? Where is that going to go? Right? There's all these questions. And I'm curious because I think sometimes there's right questions and there's wrong questions. We're asking ourselves the wrong questions in that circumstance. I want to ask Paul, what are the better questions to ask? Like you mentioned, hey, do we have a plan? Are we sticking with it? Are we emotional? Right? I'd love to ask you, what are the better questions should we be asking ourselves during this time?
Yeah, I say all the time to my team, let's focus on the things we can control, not the things we can't control. And I think the questions need to be around things you can control. Anybody that tells you that they can, project where the stock market's going to go, or where interest rates go, or when the market bottoms. It's all BS, right? Nobody knows. Nobody's got a crystal ball. If anybody gets it right, it's a little bit smarts. It's a lot of luck, right? Because the world can change very quickly, and does. And performance is really all about the period you measure it across. What may look like a great investment today, 6 months ago, or a year ago, crypto, versus today, where FTX is a zero, right? So you've got to think about what you can control, and I think, again, all the questions are around that. So in these types of times, for the average person with a retirement, living on a fixed budget and a retirement account, or focus on what you can control. Focus on your cost of living. Figure out where you can cut. Figure out what you can do so that you're not necessarily eating into your nest egg. Look, I realize that may be easier said than done at times, and there will be times where you will eat into your nest egg. There's feast and famine, in markets, and the truth is, investors long term to meet financial goals often have to take risk. And the amount of risk you take is really a function of the time you have to take that risk. Again, as I made an earlier comment, time solves a lot of things, but you got to be able to show you've got the time. You don't want to be making risky bets at the wrong point in the cycle, no more than you want to be pulling off risky bets at the wrong point in the cycle. I was talking to a friend earlier today. It was, the family's considering selling some risky investments, and is this the right time to get out of these things after they're already down 30 or 40%? You need to make those decisions based on, what your necessarily, what your liquidity needs are at the point in time, as opposed to being a knee-jerk reaction.
Yeah, coming down to having a plan. And I'm curious on this because I've seen this, and I had one guy I was talking to in regards to like that risk tolerance versus risk capacity. And what he basically explained is like, yes, you may, jump out of the skydive, right? However, though, if your doctor says, hey, if you skydive one more time, you'll die. So you tolerance, you can do that, right? Your risk, but the capacity of doing that is not, right? Not there. And I want to get your opinion on that, because I think that's really, really, what you're basically talking about here, and saying, okay, hey, yes, we've got some money rocking and rolling, but should we liquidate and really wait until, sit in dry powder, which I'm noticing a lot of people are sitting dry powder until obviously, some other things, some opportunities present themselves? Or should you just, stay consistent and kind of that diversify process? So I'm just curious what's your thoughts on that?
Yeah. So, in the financial world, we talk about it as the willingness to accept risk versus the capacity, the capacity to accept risk. It's on paper, you can determine somebody's capacity. You can look at their balance sheet, you can look at their spending and say kind of how much risk, can they assume here? But in the end of the day, you always go with what the client's willingness is. In other words, you may have an extremely wealthy client, a wealthy individual that has the capacity to take a lot of risk, but they just can't stomach it. And I say all the time to my clients, don't optimize for beating a benchmark. Don't optimize for beating the S&P or whatever your benchmark is. Optimize for sleeping at night. Optimize for sleeping at night. If you make a risky investment and it's bothering you, you can't sleep at night, it's probably a sign that you shouldn't be making those types of risky bets.
Paul, I love what you said there. And I really appreciate you saying this, because this is the way I think about this sometimes. When I was younger, and I would have, I would invest, I was 21 or something like that, I would invest into a stock. I would just always automatically start thinking the positives, right? Oh, if I put $1,000 in here, oh man, and it goes up to $100. Oh my gosh, this is gonna be amazing, right? And what's interesting is naturally we always gravitate toward, like, we're always like better, we're overconfident, et cetera. And we think we're really good stock pickers. At least that's how I am. And what I realized though, is during that time, that was a really good experience where I needed the money. I was 21. I was just driving for Uber, just really small. Like, I didn't know what the heck I was doing. And I was like, I need the money. So I liquidated that stock. And obviously the stock did go up later on, but that was a time where I did this stupid thing where, it was emotional, right? I needed the money. I needed this. I needed, right, whatever. And it's just a good example of what you just mentioned. It's like, hey, if you're not willing to, if you're in a situation where, oh gosh, and you're literally losing sleep, I think that's just a good test of your own of your own willingness. I think that's where did you come up with that? Was that just yourself personally, doing your own investments, or was that just
Yeah,
from years of investing with people?
yeah, I think apropos my comment earlier about, you know, when you're young and you're making investments, everything looks great. You know, every biotech idea has a cure for cancer, and every tech has got some huge scalable business and so on. And you don't learn until you make those mistakes and those investments go to zero that things rarely work out in life like you originally anticipated. I'm not saying they don't work out; they actually have a tendency to work out, but they have a tendency to work out in a way that you least expected it. And so, I think over time, which is what my wife accuses me of, is, I temper my exuberance because I understand that things usually don't work out like you expect. And if you temper your exuberance, it's not to say you won't make the investment, but you'll think about sizing the investment a bit differently. I think that's another very important lesson that you learn in investing. Is the investment a good idea? Is it a bad idea? But it's really about sizing. Is this investment, if it works, is it going to change my life? If it doesn't work, is it going to change my life? A great example of that recently is this crypto craze. All of a sudden, when I know people that have never been investing in financial instruments in their life and everybody's investing in crypto, I scratch my head and I say, geez, this is probably not going to end well. You can't have 100% of your balance sheet in anything, even cash, right? Because you need to meet longer term objectives. And I own a little bit of Bitcoin today. I owned more before I bought around 10, 11,000. It ran up. I was selling in the 40s and 50s, and it's not because I knew anything. I was just kind of rebalancing. I was saying, geez, Bitcoin's up 3, 4, 5x in my portfolio. Geez, this cannot continue. I remember when I was a young broker in 1999, and I was pitching a software engineer that was making $60,000 or $70,000 a year, and his stock in a local technology company based in Cambridge was on paper worth like $3 million. And I was a year into being a financial advisor, a broker at Payne Weber, and sitting across the table from me, he looked at me and he said, my net worth has grown at 50% a year the last 3 years. And I'm now worth $3 million. And he said, why can't it continue to grow at 40 or 50%? And I said at the same time, just like I said around this crypto, I said, geez, this is not going to end well. Things don't, as my father used to say, trees don't grow to the sky. Things don't grow forever. And, anytime something seems too good to be true, it's probably too good to be true. And if that's the case, if you're getting that gut feeling, which I was back when crypto was topping 40,000 and 50,000 and 60,000, I was selling. Of course, my wife was renovating a bathroom and I needed some cash for that. So it kind of forced me to sell. But, neither here nor there, it felt okay for me to sell. And I said to myself, geez, if it goes up to 100,000 or 200,000, I'm still going to have some exposure. And if it goes to zero, I'm not going to be so sad. I will have pulled out some of my chips and covered my cost basis. So it's being deliberate. It's being dubious on investments, questioning whether or not the merits are there, but it's also sizing your position. And that relates a lot to life too,
Yeah, and correct me if I'm wrong, it's almost like understanding your own behavior as well. Like I know I'm a very risk adverse kind of person. Like I love risk, I love getting into it and whatever. And I'm willing to be one of those people like spend every penny of mine for growth, right? Whatever it is, into some sort of idea. But I've also realized that's a bad thing as well, right? Definitely at the beginning stages of building a business, you kind of have to, right? I'm willing to invest everything back in my business, but at some point you have to kind of say, okay, you know what? I'm making fine. I can take some dividends off of it. Now I got to really kind of protect the wealth and preserve it, right? And that's how you build that long term. And I'm curious because this is kind of how I structure, and I just want to get your idea because I put about 70% consistent, where it's boring, it's simple, and it's consistent. And that's where 70% of my portfolio is. 20% is a little bit more growth. 10% is my play money. I can do whatever. I can invest into alternative investing. I can do in Bitcoin, whatever. If I lose it, it won't hurt me. If I gain it, cool. I reallocate everything. But I want to get your perspective on that. What do you do this very similar,
Yeah,
or is it?
I think everybody's got to have a plan, right? Your plan is unique to you. And I think everybody's got to have a plan and you got to stick to that plan. What you don't want to have happen is have some success with that 20% money and start taking from the 70% to fund the 20%, because that usually doesn't end well. right? And it's the same on the reverse side. I think the most important thing is you've got to set out your plan from the beginning, and you got to stick to the plan. The one thing that I've learned in my career over 20, 25 years of dealing with clients, investing in the markets, is where I've seen it go wrong is when people did not stick to the plan. You should only change the plan when your life changes, not based on what happens in markets and financial instruments in the economy. You got to stick to the plan. I saw people panic in 2008, 2009 and sell everything. And then you had this meteoric rise in 2009, 2010, 2011. The problem with being all in or all out of things is you got to be right too many times in a row, right? And nobody's that good. You're maybe smart enough to get it once, maybe twice. You're lucky enough to get it in a row. But to have with consistently being able to time global events and ups and downs, it doesn't work. It's not a winning strategy long term. So again, it's all about sticking to the plan.
And I just want you to know, Paul, that I did not stick to the plan for a while. I was sitting there and I was reallocating. I took the 70%. I brought that down to 50. I was like, oh, shoot. And I got myself in a situation. But, I appreciate you explaining that, because it is sticking to the plan. I've heard that, but it's so funny how we just don't, because sometimes like my ego got in the way. I'll tell you that. I was like, oh man, I'm really good at this shit. And I'm like, nah. And then obviously I figured it out. But that's why I have people.
You confuse luck for skill, right? And that's dangerous.
Well said. Paul, man, I really appreciate your conversation today, man, and just unpacking your journey, just the evolution of what you've gone through, but also just like that, like you mentioned, the mindset, unpacking that stuff and really that perseverance, but also just being able to have the right paradigm shift when you're coming to every situation, implementing these certain principles, and really mitigating that loss. Paul, I always love to ask, my audience, before I let you go, first of all, how can my audience reach out to you and be part of what you got going on? I know you're on LinkedIn, and how else can they reach out to you, man?
Yeah, I think LinkedIn is a good way. Otherwise you can look me up and you can send me an email. My email is pk@twinfocus.com. I get about 2,000 emails a day, so I can't get back to all of them right away. I have to prioritize, but I'm always open to meeting new people and hearing about, interesting ideas and whatnot. So, and I'm also one to give a quick no if it doesn't work for me. I don't like to waste people's time.
Definitely. That's awesome, man. And guys, those links will be in the description there. So make sure you stop what you're doing and follow him on LinkedIn and other places there. Paul, again, I really appreciate just being on today, man, and just unpacking this for our audience and really giving certainty in an uncertain time a little bit. And I always love to ask you, is there any last words of wisdom that you'd like to share with our audience before we let you go?
One of the other big investment lessons that I've learned in my life is everything takes more money and more time than you think. And it's why you got to stick to the plan and you've got to persevere, so.
Well said. Always have the right expectation. That is my friend, the managing partner of TwinFocus, Paul Karger. Guys, that is a Journey with Christian D. Evans podcast. Until next time, be uncommon if you can. Yo, this is Christian D. Evans, Journey with Christian D. Evans podcast. We thank you so much for listening to this amazing episode. If you feel and you know that this was valuable to you, please show some love to our amazing guest by liking this, by commenting on this, by making sure that you do a nice 5-star review and just show some love to our guest. That'd be really awesome. Also, make sure you share this with a friend, a family, a colleague, someone that you believe would bring value to their life right now. And guys, we just want to say thank you again for just being part of our community. If you want to have more resources, don't be afraid. Go to christiandevans.com. You can actually schedule a phone call with me, or you can send me an email at christian.evans@beUncommonIfYouCan.com. That's christian.evans@beUncommonIfYouCan.com. Always love to hear some feedback and let me know what is the number 1 or 2 things that you are struggling in your business and your life, and we'll make sure we have those conversations. Guys, that is Journey with Christian D. Evans podcast, and until next time, remember, be uncommon if you can. Cheers.